right, we're a little bit early. We'll let everybody get situated. I'll situate my screen. I'll make sure that we have all the links up. Let me turn on video here, just because you can see I'm always got a hat on from somebody, from a Wolf Den member. This is a Guard Your Guard hat. This was brought to me at the last event. I really like this logo. It's great. And obviously got the guard gear, which was also brought to me at the last event. And if you were at DGen 3, you got one. You should have gotten one of these. They're pretty neat. Thanks to Brandon and Angela Straza. Call them Mom and Dad. And we'll get rolling. Go ahead and you can let us know you're here. You can drop a comment. You can hit the thumbs up button. If you have questions throughout, you can drop them. Here's the trick. Okay, if I have time, I'll try to answer questions. But here is the trick. You have to give context, meaning if you say, what do you mean by that? Like 22 minutes later, I'm not going to know what you're asking. So if you say, hey, what did you mean when you said X, Y, Z? Then I can quickly orient and try to clarify. Okay, so as per usual, the Wolf Den and the CCA and certainty, it's really about becoming a more effective human. Now, effective meaning giving you more power over the outcome, getting closer to what you want. And part of that is asking good questions so you get the answer that you're looking for. A lot of times people don't actually ask the question they mean to ask. Like people say, what does protein do? When they really mean to say, should I eat more or less protein? That's a completely different question. You ask a biochemist what protein does, and you're going to see steam come off the top of their head because they're trying to process how do I explain 12 years of chemistry to you in 5 minutes. So just understand that the quality of your questions will determine the quality of the answers that I can give. Skill set to work on. All right, yo, Wolf Den, love you guys. Hey, we feel the same way about all of you. Showing up to be present and eager to learn more. Juliana, MD, medical doctor. We get a lot of, I have a lot of doctors in my audiences from past companies too. I still talk to a lot of them. Great humans, critical thinkers. All right. Wolf Den Town Hall. So I do have slides. I'm also going to bounce between slides and notes. You're going to see I have a few things. I have my notes here that I will share with you guys. Scrolling, and I have resources. This document is actually in the description here. Okay, so I'm gonna scroll over stuff, and if you want to bookmark it or reference it for later, or bookmark it for later, reference it quickly, the resources are here, and if new stuff pops up, I'll try to put it in here, okay? Probably not gonna do this at every town hall, but we got a fire hose to the face, and there's a lot of stuff that can really help you orient, right? Here is the unfortunate reality. Most people want to be in the market. They want to fancy themselves investors. They want some exposure to crypto. They want to, even on longer timelines, they want to set aside a nest egg for 10, 15 years from now. They are not prepared for the vicissitudes of the markets. So I'm going to try to keep giving you resources that kind of help you orient on that, okay? The vicissitudes, meaning the unexpected volatility. Now, it's not unexpected to us. Because we have prepared for it. We've been inoculated to it. It's unexpected to a lot of people because maybe they got into Guard and saw it go straight up for, like, Guard had green weekly candles for months. That is not typical. That is not supposed to happen. We're supposed to see big green, little red, big green, little red, big green, red, red, green, 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 red, red, right? Like, so a lot of people are just spoiled in whatever they've been in the past, right? If you bought Bitcoin at 20 grand and you watch it go straight to 60, and your brain, what our brain does, our brain is very, very tricky. We see a line going up, and our brain extrapolates it straight out, and we start dreaming about what it's going to be like. And it never is a straight line. Straight lines do not happen in the real world. On the flip side, we see a little line down, and our brain, being a tricky little bugger it is, extrapolates that straight down. And it's a version of, if you watch Dan Nicholson's Town Hall with the Luna Den, it's a cognitive distortion in that we don't understand how to process expected value. We all or nothing thinking. It's either going to a million or it's going to zero. I'm either getting rich or I'm losing it all. And that is not true. There is a ton of gray area in there. A ton of gray area, and it changes depending on your time preference, right? Like on a short time preference, if you said, okay, Bitcoin has to go to $100,000 in December of 2021 or I'm screwed. Well, you did put yourself in an all or nothing situation. It either goes to 100 grand or you're screwed. That is a bad strategy. We talk about keeping time and randomness on your side, driving risk down, driving effort down, driving options up. That's a CCA framework, certainty U framework. So most people, when they're telling me their strategies, they're talking about how they're thinking about it, they are putting themselves in a really poor position. Okay? And it's avoidable. It's avoidable by recognizing the cognitive distortions and then navigating them appropriately and building the systems and frameworks to prevent yourself from blowing yourself up. That's really the game. Guard your guard. Yep. GYG, and we'll talk a little bit about GYG today because we're going to go full in fire hose to the face today. I was supposed to have a hard stop at 11, and look at this colorful shirt I have on today. We're supposed to have a hard stop at 11. Unfortunately, my 11 o'clock CCA had to be moved. So we're just going to roll, and I hope you guys hang out with us. I have no idea how long or how short this is going to be. But this is all about giving perspective. Now, let me make this clear. We are not going to rescue everybody. We cannot. Not everybody is going to make it because of that insidious human mindset of ours. People are going to panic. People are going to make bad decisions. People are going to do what they do. We cannot rescue them. What we do is we show up as much as possible, especially in times of uncertainty, and we try to help level people out to give them the highest probability of not blowing themselves up. And that's what we're doing for, I don't know, months, years, until the economic conditions improve, if they improve, right? Which things go up, things go down, things go up, things go down. This is how it goes. So that's what we're here for when we say guard your guard. Guard your perspective, guard your mindset. We are here to provide as much of an oasis of stability as possible. But it is on you as a viewer, as a listener, as a participant to extract the value and implement it. Okay, nobody's saving anybody. We're leading. Leaders are going to help more people than saviors are, in my opinion, and that is the stance that we take, and that is where we operate from. It's not the only way to operate. That is how I'm just making it clear how we operate. Okay, try to make our assumptions, and the color of our glass is clear, so that people can navigate appropriately. And also, you have to understand our perspective. So you could say, I don't agree, but coming from that perspective, it makes sense. And then you can reverse engineer, or you can use the concepts and principles running through your lenses. Right? This is not about agreeing on our beliefs. This is about basic concepts, principles, frameworks that anybody can apply to their own beliefs. GYG. All right. So Wolf Den Town Hall, 526. Here we go. We officially just started because it is 9:01. Okay. We're going to go quotes of the month. Now, I'm going to start modeling the town halls and some of the Wolf Pup series after the CCA, because the CCA has transformed human beings into more incredible human beings consistently, more so, and more consistently, more reliably than we've ever seen. So if something is working, and we can model it somewhere else, we're going to model it. Quotes of the month. The first one. This will always be a quote in everything we do because it explains so much. Most prefer the certainty of misery to the misery of uncertainty. So what I mean is, if you give somebody, can you tune up the volume? No, you can turn up your volume. Mine's been the same since the beginning of time. I have the same settings, same microphone, same everything. What this means is that logically, if a human is faced, they're at a fork in the road, and they say, door 1, 100% chance that you are miserable. Door 2, 1% chance that you find happiness. Logically, mathematically, no matter how you want to look at it, the pragmatic person is picking door 2. 1% chance of happiness is better than 0%. But in reality, this is not what people do. This is not what people do. For example, do you know anybody, or have you ever stayed in a relationship you knew was not going to get better because it was better than not being in one and not knowing what was going to happen? You ever stay in a partnership or an investment that you knew, you said this is not going to get better, but at least I know what's happening, and it's better than not knowing. The devil you know, right? The devil you know. That's a thing. Second, Joe Polish texted me this last night, and this also explains a lot. Now, he's big into addiction recovery, and this is why a lot of people blow themselves up in life. They get rich quick overnight. They win the lottery. They have a hit song, the right place, right time. The video goes viral. They invest in Dogecoin, whatever. High levels of dopamine achieved without effort will destroy a person. That doesn't mean that good things can't happen to you. It means guard your mind. It's not saying good things destroy people. It's saying if Bitcoin or Guardian or the S&P or your business is doing well, you remain stoic. You don't stare I tell people this all the time. Staring at the chart when it's going up, you are setting yourself up for destruction, because you're maybe you're at work or you're at the beach or you're with your family and you're looking for a dopamine hit. So you look at the chart and it's green and yeah, that feels good. You are setting yourself up for destruction, seeking artificial dopamine hits that do not require any effort. Okay? Now, effort, there's a distinction here. Not looking at the charts requires effort for most of you, right? If you are a high-performing human, doing nothing requires effort. Taking a nap is hard. For all you type A's, hard charging, yada, yada, yada's out there, how hard is it for you to take a nap? You got to be doing something productive all the time. So it's really clear, or we need to make it clear that effort doesn't look the same for everybody. Sometimes avoiding that dopamine hit just for the sake of the dopamine hit is the hard thing to do. And by doing so, you are less likely to destroy yourself later on. Okay? I hope that makes sense. Think about it. Most people in crypto, even the really smart ones, the really successful ones, they are seeking a dopamine hit. How you can tell by the disconnect in your time preference and your exposure. I've put out articles and made videos about frequency of exposure, and this is what it is. Okay? You say, I just want to buy this, I believe in it, and I don't want to look at it for 5 years. Well, if you look at it more frequently than every 5 years, your frequency of exposure is higher than your espoused values, which means you are seeking dopamine without effort. Right? So maybe you got to change. Maybe I do need to look at it quarterly to make a decision. Fine, then look at it quarterly. Right? Now, if you're looking at it daily to make a decision, you really got to consider why you're making daily decisions. I don't agree with that method. I'll explain why today. We're actually going to go over that. But you can tell when you are trying to achieve levels of dopamine without effort when your espoused time preference does not match your frequency of exposure in action. Okay? Yeah, I'm a long-term guy. You know who are long-term investors? Successful real estate investors. You know what they don't do? Check the chart of each house every day, because there is no chart. Good for them. That probably saves their ass. Okay? So check yourself, Guard your mind. Guard your mind. You should have a time preference and an appropriate frequency of exposure, and if you catch yourself looking at something more frequently than you are intending to behave on it, you are only seeking dopamine without effort, and you are setting yourself up for failure. I do not look at things if I have a appropriate time preference. I don't. I track it all so that when it is time to look at it, I have a trend. We make decisions on trends, not single points of data, not lines, but trends. Not a data point, not 2 data points, but 3 or more. More data points over a longer time is a more reliable trend. Yep, I'm reading the comments here. Okay, so timely text by Joe last night. I just threw this slide in here today. It's why it's a different text than everything else. Andrew Huberman is brilliant. You can listen to his stuff, and he will just echo some of the stuff that we've been talking about, go way deeper, and he's way more articulate than I am. But humans, we blow ourselves up, and then we blame other people over and over and over and over again until we can stop pretending we're looking out a window, at all these problems and realize we're looking directly into a mirror, it does not matter what you invest in. It doesn't. Anybody that bought Bitcoin at $1.50, most of them still blew themselves up. But it's gone a gazillion X. Yeah, but they blew themselves up before they could realize it because they're looking for dopamine. They rather be in an investment they know is going to underperform than not know what's going to happen. Why would you lock in underperformance? Because that's what humans do. They prefer the certainty of misery to the misery of uncertainty. They rather know they're going to lose than maybe win. You'll see it over and over. You will not be able to unsee this quote if you really think about it. People rather guarantee a loss that they understand than have a chance at a win that they don't understand how it's going to happen. All right, so that's quotes of the month. The other thing we're going to pull is we're going to pull the 6-word update. Okay? 6-word update. We already got some here, so I'll share them. One of the best ways to refine your thinking is a 6-word update. Okay? Encapsulate, tell a story in 6 words. Don't panic, our movement is organic. Wow, that one even rhymes. See, 6 words, it tells a story, and it means something. Feeling wolfish on guarding my perspective. Okay? Try it. You'll get better and better at it. Do it often. 6-word update, 6-word update. It will refine your thinking. It'll help you become concise. You'll practice brevity and remove a lot of fluff. Being off-center reveals the center. 6 words. So this link is in there. If you want to drop your 6-word update today, tomorrow, after watching this replay, whatever, I challenge you to drop a 6-word update. 6 words, beginning, middle, end, if possible, but really share some insight in 6 words. It'll challenge your brain to really dial in what your thoughts are and how to share them, okay? So town hall schedule. From now until about 10:30 a.m. Pacific, we might go a little bit over now. We have what we're doing right now. We're just going to roll, okay? It'll be long. I'm sorry. As per usual, those that consume everything will pick up nuggets that might get missed elsewhere. From whenever we're done here till noon, we're going to have a VIP call only. Now, that link will be a Zoom link. It'll get posted in the Guardian chat, and it'll get posted in the chat that you got for donating to Genius Recovery. If you donated more than $1,000 to Genius Recovery, you have something very special coming your way from Joe Polish and his team. I don't know what it is. I was just told anybody that donated over $1,000 is getting something special. And you're also going to get access to this VIP call here. And at noon, we're going to have Dr. Jeff Spencer. And then 6 p.m. Thursday night boardroom tonight. Business owners, if you are a business owner, you want to be a business owner, I recommend you come check it out. Do not act like an a-hole, please. We have $1 million business owners. We have multi-billion-dollar companies. We have people that are just starting out. We have people that are thinking about entrepreneurship. We have executives at multi-million-dollar companies. It's a diverse group, but they show up to help each other. So none of this like weird thinking you're being funny in the Zoom chat, making jokes, when this is like, these are people that are showing up to have fun together, but most importantly, help each other. Okay? And you are welcome to come. You are welcome to participate if you're part of the Wolf Den. I shared the link to join last night, but I'm asking you to not be a total degenerate, because it is a gift to be there. It's on its 11th or 12th year now. I think there's 800 people in a global mastermind. We get anywhere between 20 and 50 to show up, and we just share and help, okay? So that is my ask. I will continue to try to give more access to real-world stuff as long as people are being respectful. We had 2 Wolf Den members at Genius Network. Genius Network is one of the hardest groups in the world to get into, and they handled themselves really, really well. So that means that I'm more open to helping more people get into these exclusive environments, okay? That will continue. It will also stop if it is disrespected or whatever. 6 p.m. Pacific, yes. Okay, so Town Hall resources, I showed you this link right here. Okay, and you can just drop your 6-word update right there. Travel dates and announcements. For those of you that want to get into the real world because you've been obliterated by COVID, or you just want community and all that stuff, this is where I am speaking. And this does, one, I told myself I'm not going to do any speaking in 2022. And then, when the right people call, you answer. That's just how it goes. This does have a direct impact on the Wolf Den, and I will tell you how and why a little bit later on. But I will be at Genius Network June 16th and 17th. Okay, at Genius Network, I am going to get interviewed, and we have an announcement that is directly going to benefit the Wolf Den in a very big way. I don't want to share that announcement yet. I'll give you some details. We're going to have a conversation. The Genius Network is 218 people that pay $25,000 a year, and they're going to be watching this interview. And I'm going to answer some of their questions, and then we are probably going to launch a podcast or a series just talking about crypto. And this audience there is not a better audience to be in front of in the world, in my opinion. Joe has done an amazing job of cultivating that. Now, the Certainty Summit is actually July 22nd here in Seattle. If you guys have been to a Certainty Summit, you know the impact. So July 22nd, you want to come out to Seattle, be part of the Certainty Summit. Details will be there. API, I'm speaking at Almost Passive Income. That's Ian Stanley's group on July 16th. All of these events always directly bring in new money, specifically to Guard BUSD, but to all Wolf Den assets, right? Because when you come into Guard, you're introduced to Night, and so on and so forth. Genius X. Now, Genius X is $100,000 a year to be a part of. It is probably the most exclusive, high-end business mastermind, and I will be there. I will be probably doing an interview there, and we are doing a project with Chris Voss. I'm 99% sure that we're going to carry on with that. That will also be a direct benefit to the Wolf Den. I'll explain later. If you know Chris Voss, he is the owner of the Black Swan Group. He wrote the book Never Split the Difference. It's been a bestseller for years now. I strongly recommend you read Never Split the Difference. Chris is brilliant. Either way, go in there to support him and help Joe with Genius Network or Genius X. Steve Sims. Most of you know Steve Sims, the real-life Wizard of Oz. He just asked me to speak at his speakeasy October 17th and 18th in L.A. When Steve asks you for a favor, you show up, because you can ask Steve anything. If I wanted to introduce the Wolf Den to the Pope, you would call Steve. He can make that happen. So we just helped him with his book launch and all that stuff. Genius annual event. Okay, the Genius annual events November 3rd and 5th. I think there's going to be 350 or so people there. And then right after that, we roll into the Grey Wolf Summit. If you had to pick, I would obviously say Grey Wolf Summit and the Certainty Summit. Those are the two things that are the most aligned. And I'm sharing this with you because these are all aligned with stuff. If you like the Wolf Den stuff and you want to get more into the real world, which is really what we're about. We're not trying to be some internet only, blockchain isolated, weird project like all these other projects are doing. This is really about making an impact in the real world, and that impact as it grows directly gets reflected in the price of Wolf Den assets. And I'm going to explain how that works, because I'm realizing humans are a little linear and they don't quite understand how value reflected in the market works. And so I'm going to try to give you some perspective that might help you reframe how to think about some of these things. Okay, so that is the schedule. If you are in Seattle, Arizona, Idaho, LA, and any of those things work, keep an eye out. Certainty Summit, here's what I know. I know Certainty Summit can be paid for in Guard BUSD, and the Grey Wolf Summit the profits will go to Genius Recovery and buying back Guard. So these all have a direct or indirect benefit on the Wolf Den, mostly introducing all of these people to the concept of the base case. That's what we're doing for the most part. All right. Now, we'll talk a little bit about it in 2023 after Grey Wolf Summit. I am not doing any more public events. I will show up in service of others, but I will not be hosting any more public events. So last chance, Grey Wolf Summit's going to be the last chance to be at a publicly hosted event of ours. If that is interesting to you, it may not be. Another point here, and this is old school. Remember when I used to just go through Twitter and talk about stuff? We're going back to that. Here's a little insight as to how we are operating now. People have said, wow, a lot of videos, you're showing up a lot, yada, yada, yada. This is not new. This is from Ben Frank. Ben Frank has been in our world he's probably been 5 or 6 years now. Before I was doing anything in crypto, Ben said, Dan, your and Nick's generosity during COVID with the daily calls when my businesses were all being shut down, I'll never be able to express how meaningful that was and how I can't imagine what would have happened if you didn't do that. And actually coming out of COVID, things are better than they have ever been. A large result of those calls you completely gifted to your community. This is how we stay wolfish. This is our opinion. You can have a completely different opinion, but I want you to understand the frame from which our behavior comes from. When everything is good and everything is bullish, I go dark. There's no point in trying to be louder than all these fake experts and everybody's winning and everybody looks good and blah, 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 blah. That's not a good use of resources. I don't really like being public facing. If you know me really well, you know I don't really like talking to lots of people. So when everything is good, we want to stay quiet. Everything's good. There's no benefit. It's like if you got the wind at your back and you're going with the stream, there's no point in showing up and rowing, right? Like you're going to end up in the same place regardless. However, if you don't row, you conserve those resources, you conserve that energy. When the winds change, when the tides change, you will have the resources to hold ground. Okay, we don't swim upstream, but we hold ground. Okay, how do we hold ground? We show up when people are in pain and we just give and we give and we give. And what happens, and we help and we ground and we give perspective. And what happens over time is more and more people get helped through times where nobody else is helping them. And that accumulates. It accumulates faster than anybody thinks possible, but slower than you want. Because you want to be rich overnight. I get it. This is we operate on a longer time frame. And yet people talk about the wolf den all the time and say, like, you guys do stuff so fast. And yet our disposition, again, is slow and steady. It's funny how that works. Slow and steady up close, super fast from afar. So when everything is good, we take a back seat. We let all the people pretend like they're experts. They build in you know how many projects are like, oh, we're not going to launch until Bitcoin recovers. All that tells me is that fundamentally you don't have a sound product. You're trying to ride the market sentiment. You're hoping market sentiment takes you to the promised land. And it probably won't, because the sentiment doesn't last long, as many of you have learned in the last Bitcoin little wave, right? So we build in bearish conditions. We show up in bearish conditions. And then we sit on the sidelines and let the market sentiment do all the work for us in bullish conditions. And right now we are in bearish conditions. I'll break down some data for you guys in a little bit. But this is where we're coming from. And this is years and years and years. You can go back a decade of people that are still following. They're in the wolf den and they're guarding their guard because 8 years ago we did the same thing. 2 years ago, 3 years ago, whenever COVID hit, we did the same thing. This is our style. You don't have to agree with it. You don't have to like it. But if you know it, you can navigate it. If you know the rules of the game, you can play the game effectively. So I'm just giving you our rules. You don't have to agree. You know the rules, then you know how to break the rules too, and that's fine. Just giving everybody as much context and information as possible to navigate all of this, our ecosystem, the way that they want to navigate it. And again, it's helpful to know the rules. So we're going to keep this up, okay? Collective momentum in the Discord group, in the Telegram group, in the Twitters. We are positive. Don't get into any arguments with anybody. We're not trying to tear anybody down. We're not trying to prove anything. We're building. We're building, and we're building, and we're building. Okay? Which leads us to what I think is the last tweet. Guard your guard. Guard your guard. Just a reminder, when we hashtag guard your guard, it doesn't mean everybody needs to buy guard. It's to remind people to stay grounded, guard their perspectives, and guard their minds. It's recognizing, when we hashtag guard your guard, it is saying, hey, look, the war that I'm fighting is a civil one. It's not against this guy on Twitter or this chart or this whatever. These things that I'm fighting are internal. They are. fear, greed, FOMO, lack of perspective. I made a lot of mistakes. I'm still making mistakes. So when we tweet guard your guard, we're recognizing that we have to work on ourselves. And until we stop fighting ourselves, we're not going to win anyway. You don't have to hold any guard to know yourself. Remember what matters to you and not let fear, greed, hype, or FOMO hijack the things that matter most. So here's to getting closer to what matters most to you. All right? That is what we mean. You don't even have to hold guard. I don't care. Guard will take care of itself. It is well on the way of taking care of itself. However, this is our reminder to protect your mindset, your perspective, zoom out, solve your solvable problem, use the frameworks and tools, understanding we are human and we are fallible. I am incredibly dysfunctional and fallible, just like everybody else, but we have these things that keep us grounded. We limit our frequency of exposure. We keep perspective. We have a appropriate time preference. We don't get greedy. Like, these are things that guard your guard represents. So guard your guard, whatever that means for you. That could mean stack your fiat, stack your cash, and don't chase crypto. If that is your guard, great. You need to remind yourself not to chase shiny things, great. Not here to tell you what to value, just to protect those values. And don't act in diametric opposition of those values. All right? So we're going to guard our perspective. Okay? Guard our perspective. Now I'm just going to cover a few things that I already covered this month. I'm going to zoom through them. But here's what we do. God cannot beat DCA. All right? These are 2, 3, 4. I shared a bunch of articles that broke down. You can see them right here. And you just Google, can God beat DCA? And what you find in a strong asset, see, even God couldn't beat dollar cost averaging. This data came out, and there's a ton of interpretations of it, but it's all the same. This is what charts look like. If this freaks you out, do not be in the market. This is the S&P. This isn't like Bitcoin or some shit coin or some brand new fancy thing nobody understands. This is the S&P, and look at this volatility. Okay? And what it shows is that consistent buys. Let me see if I can find this chart here. Okay? People that try to time it perfectly. Ooh, guard is high, I should sell. Ooh, guard is low, I should buy. They lose to people that just make consistent buys, assuming that on average this goes up and to the right. If you're in an asset that goes down and to the right, then it doesn't work out the same. So we have to assume that we have to have a macro belief in something. If you believe the S&P over time is going to go up, frequent buys, weekly, monthly, quarterly, whatever, daily, whatever, put it on autopilot, will outperform perfect timing. That's why it's called can God beat DCA? Exact perfect timing, which you do not have, I promise you. We are very fallible, but even God does not beat. God, meaning perfectly timing the market, does not beat frequent purchases. Okay? So if you think you're going to watch charts and time it just right, no, it's going up. Should I sell? Should I hold? Then you're not looking at the data. You don't have a macro belief. You're not guarding your guard. You're not guarding your perspective. You're not guarding your mind. You are setting yourself up to fail because, as Dan Nicholson would say, there is a preponderance of data that says what you are doing right now, your strategy, is going to lose. Even if you're nearly perfect. Okay, so we have to understand this to properly guard our perspective. When we go, should I buy? Should I sell? Should I wait for a dip? Look, if you have $500,000, should I wait for a dip? Should I do this, do this, do this? I don't know, put $10,000 a day for 50 days or $25,000 a day for 20 days or once a month, whatever, right? Like, come up with some schedule that makes sense. It will be better than trying to guess just right. Now, over a longer time period, because we should be thinking, 3, 5, 10, 15 years. It doesn't really matter if it's monthly, weekly, whatever. I have a daily buy on Bitcoin still. It's not very much. But it's running, and I'm like, I'll just leave it. Whatever. So we gotta guard our perspective this way, okay? We have to understand also that things are going to go up and things are going to come down. That is what they do. If you think it's going to go straight up, you have not studied anything about investing at all over any appreciable amount of time. And if you think coming down means it's over, then again, you haven't studied anything about investing over any amount of time. And if you think going up means it's never coming back down, you haven't studied anything over investing over any amount of time. Right? So it's just, this is how we guard our perspective. There's some rigor in our inference. If we're like, oh, it's going up. Oh, it's going to. So when our brain extrapolates it straight up, we go, oh man, at this rate, it's going to do X, Y, Z. Anytime we say at this rate and we let our brains go there, it is a clear distinction that we do not understand data, or we understand it, but we're letting our emotions override what we understand. You can study baseball statistics, you could study the stock market, you could study crypto. At this rate assumes a perfect linear progression, which has never happened in the history of time, ever. There is no perpetual linear progress in nature, in life, anything, okay? So when we let our brains do this, we either don't understand data, we're using data to make bad decisions. That's what most people that think they're data-driven, are not data-driven. They're emotional, and they're using data to justify those emotions. Those are very different things. Okay? So if we extrapolate it in a straight line, then we are ignoring data. Now we can take an average, a rolling average over time, and extrapolate that out, which means it goes up, down, up, down, up, down, up, down, up, down. But there will be a rolling average, right? And typically it's going to look, with investments, especially like technology, is going to be an S-curve, right? We all know what an S-curve looks like. It looks like this. It's too big. There we go. Here's an S-curve. Okay. So a rolling average oftentimes is still not a straight line. It is an S-curve, and there is a point in this, typically with adoption, 100% market share goes asymptotic. Right? So this is what data does. So if our brain does anything other than rolling averages, and if it's not operating on an S-curve, then we might want to check ourselves, because most things are going to, in terms of, especially in the market and adoption, right? At some point, Bitcoin becomes less volatile. It levels out. It might be more volatile before then. Who knows? Okay? So what we're looking at here is how a market actually works is this. I'm going to oversimplify, but I don't think people quite understand this. There's a supply demand. There's a supply, okay? 50 million guard. People buy guard, and it represents something to them other than what they can sell it for right now. So they don't sell it at the current price because it represents more, which means somebody else wants to buy it, but since nobody's selling at the current price, they have to pay more for it. That's it. So the things that will drive price is a limited supply, scarcity. We know that, right? Pokemon cards, rare ones are worth more. Why? Because there's less of them, right? One of one Beanie Baby, it's worth more. Why? Because there's only one. If I'm not willing to let go of it for the current market price, then you have to pay more for it. Therefore, the current market price has gone up, right? So like the limited supply on Bitcoin, limited supply on guard, assets with a limited supply are going to have more of this supply shock. However, it takes time. It takes time. So Bitcoin is a good example. Bitcoin goes up and then it comes down. Okay? It goes up because all these people think they're going to get rich. All Bitcoin represents to them is the current price. Then it comes down, but it doesn't come down as low as the previous all-time low, because there's more people that refuse to sell it. And then it goes up, and you get a whole bunch of greedy people. They don't know why they're buying Bitcoin. They have no idea, because their brain just extrapolated a line straight out. And then it comes back down. But this valley is a little bit higher than the previous valley because there's a few more people that understand what Bitcoin is to them. Okay, Guard is similar. We do way more front end education on Guard, so it doesn't have the same extreme volatilities at this point, and I don't think it will, but could. So what happens is this. That's just the market trying to figure out what's going on. Right? And that's just an example. It'll take different shapes and sizes and all that stuff. Okay. This right here, I'm not even looking at the rolling average. This is supposed to be a straight line. I just can't draw over shit. Okay. This right here, even if this drops back down to here, I wouldn't care, right? This trend line of lows represents the fundamental value that people see, and they will not sell below that point. This represents greedy people that are trying to get rich quick. They don't know what they're buying. So when we look at like this new all-time high, and we think it's going to keep going, or we're upset when it comes back down, we've lost our perspective. We've lost our perspective. We've lost the point of doing it all, and now we are just running with emotions. Okay, so let me see if I can draw a better version of this. Again, this is Guard is far more explosive than this. Okay? But we're looking, and we've said since the very beginning, go back to our beginning videos, this is not new. This is not like we're explaining something to explain away what already happened. You can go back to our very first videos. We're looking at higher lows. That is the fundamental value that we're running on. And I have no question in my mind about a $23 low about Guard. That's my opinion. Of course, mathematically, it works out to be right around here in a very short time period. I'm not going to share the time period because then people are going to be mad when it doesn't happen, or they're going to be mad if it happens faster or whatever. Okay. This is speculation. This is hype. This is people buying shit they don't understand. This is people trying to get rich. This is people who aren't trained like the wolf den is trained, and their brain has it doing this. And when they realize that it might not do that, or they panic, or they read news or whatever, they sell off. But who doesn't sell off is the people that understand that Guard represents something more than the current price. Right? So our last, I'll tell you about Guard, the last low where we really hit something for that would be considered a low was 85 cents. Right now, it's chilling at like 780. It's trying to figure out if this is the low here, 780. Look at that. Anybody upset about the Guard price? Like, I get it. I understand human emotion. What are you looking at? What are you looking at? I'm going to show you today some of the mechanisms that is raising this floor. Okay? We're not going to raise the ceilings. The ceilings are people that have no idea what is going on. We can't talk to them. We can't educate them. Even if they're really smart, they're getting emotionally hijacked. These ceilings represent, by and large, now if you're making a daily buy, you might buy up here. That's fine. Because look, you bought here. Oh no, I bought a tip. I should have timed it better. But the reality is, peak to peak, we're still going up, right? That's why frequent buys are beating dollar cost averaging in the data that I shared with you guys. Right? So DCA and wait. If you believe that fundamentally the floor will raise, I'm going to share some reasons and that we believe the floor will raise and what we're doing about it. All right? So that's how the market actually works. Now, let's look at some more perspectives, okay? Because here's the question that people don't understand. And I think they understand, but it's every dollar, every decision, and this is from Dan Nicholson, okay? Every decision you make, necessarily you eliminate an infinite number of other decisions, okay? So if I decide to get on a plane and go to Arizona for 3 days, then there are an infinite number of other things I could have done with that 3 days that I cannot do now. Every dollar that you spend necessarily is a dollar that is not in an infinite other places it could be. So people act sometimes as if resources are unlimited. They look at Bitcoin and Ethereum and they invest in 45 different things. And All you do when you invest in more things is you diversify, but you typically kill your upside. You kill your upside. So let's say you have Bitcoin, Ethereum. Bitcoin goes up 3x, Ethereum goes up 2x against the dollar. Yes, you're winning, right? And yeah, you're winning against the dollar. But if all of that was in Bitcoin, you would have had more upside, right? Now, we don't diversify because we don't know what's going to happen. But just understand that money in one place is not another. So if you fancy yourself an investor, which a lot of people do, and they don't behave accordingly, the question is not, did it go up or down against the dollar in a short amount of time? That's not the right question. I know that's what you're all thinking. But if you had a macro belief in dollar, then you have to have a time frame, because the most reliable way to have the most dollars in the short term is to just keep the dollars in your bank account or under your mattress. But we understand we're not discounting the future, meaning we want to get a return on our dollars. We want them to work for us. So we can't be on a short time frame and also have a macro belief in US dollar and invest. Because investments go up and down and up and down and up and down and up and down. I'll show you in a moment what I mean. I hope that makes sense. You can let me know in the comments here. You can't say, yeah, I really need as many dollars as possible on the 15th of next month, so I'm going to invest them. That doesn't make sense. You are setting yourself to blow up. You have to have a longer time frame if your macro belief is in dollar, because we need to give these things time as they ebb and flow to outperform the dollar on average over time. So the question then, if you have too short of a time frame, you should not invest in things that move, right? And you want to invest in things that move because you want them to move up. But if they have the ability to move up, they also have the ability to move down. It's the way it goes, you know? So we need a long enough time frame to justify investment. And then the question is, assuming that we have a long enough time frame to justify the investment, where should I store my dollars? Real estate, S&P, gold, Guard BUSD, Bitcoin, whatever. That's the question. Where do I store my dollars? And then what we want is the place we stored our dollars to outperform the other options we had to store our dollars. Does this make sense? It's very fundamental. People nod their head, but then they do not behave this way. They say, oh man, Bitcoin went down. Like, okay, but where would you have put that otherwise? Did that outperform Bitcoin? That's the question. That is the question. The question is not, did it go up or down? You see this is why like real estate investors that are professional real estate investors tend to do really well, because they have a longer time preference and they skate to where the puck is going. Meaning they don't go, did my house go up or down today? They say, I believe in 6 to 8 years, homes in this area, because of all the things that are coming, you know, Walmart and this and that, I believe homes here will quadruple in worth. So they buy homes there and they wait 6 to 8 years. Okay, that's skating to where the puck is going, and then it looks like they were lucky. That's how proper investing goes, right? You have a macro belief, you have a timeline, and then you position yourself to where you believe the puck is going. If you have no idea what the future holds, I'm not so sure you should invest your own money, because you're just guessing. You shouldn't chase stuff around, right? The trick is to get there and wait and try to get a time preference that's appropriate for you. If you need to retire in 2 years, real estate is probably not the path, because it's going to take 5 years for you to churn a profit. Right? So we have to align the timeline with the strategy and the asset. I'm not saying real estate's good or bad. I'm saying if you want to retire in 10 years, real estate might be a very viable way to do that if you have the resources. But if you want to retire next year, putting all your money in real estate is probably not going to help you do that, unless the rental income, which is fairly fragile, right? But you're not going to with certainty flip all those homes for your giant nest egg. So it's resource allocation. That's what this is. And it's aligning your resource allocation with your preferences. If you got 20 years, you're going to act way differently than somebody that's got 5. Make sense? I see a lot of goofy stuff. I see people, Dan shared an example, but I see a lot of people that they're on track and they want to retire when they're 45. and then they invest a lot of their capital into something they can't access until they're 50 or 60 or whatever. That doesn't make any sense. You're actually getting further away. You're allocating your resources in a way that gets you further away from what you say your main goal is. So this is all about alignment, okay? So the question is, okay, where do I want to keep my money? And then if it goes up or down, you say, whew, yeah, it sucks to see it go to get down against the US dollar. I get it. But you're on a 5-year time preference and it's been 6 days. So that's not an appropriate response based on your time preference, right? Oh no, 6 days in and I'm down against the US dollar. Well, you didn't want to keep it in US dollars for obvious reasons. There's a lot of reasons not to keep things in US dollars, inflation being one of them. So where do we keep? So this here's a little perspective for you guys. I just updated this. And it's finally back down to earth a little bit. But let me walk you through this really quick. Okay? This is just, I also keep perspective. I don't just beat the drum and not double, triple, quadruple check myself to make sure that I'm not saying shit that is not aligned with our mission. All right. So if you look at Guard and you're saying, oh no, it's going down. This is why I'm not worried about it, to be honest. You say, okay, well, where could you have put that money? Well, 180 days ago, if you put it in Bitcoin, you'd be down 45%. If you put it in Bitcoin 90 days ago, you'd be down 23%. If you put it in Bitcoin 60 days ago, you'd be down 33%. If you put it in Bitcoin 30 days ago, you'd be down 27%. Ethereum's even worse in the short term. If you put it in Ethereum 30 days ago, you'd be down 39%. If you put it in Ethereum 60 days ago, you'd be down 42%, be down 30% over 90 days, and 55% over 180 days. You can see where this is going. As an investor, which a lot of people want to be, but are not acting as such, Tesla's down 33% in 30 days, 17% in 60 days, 18% in 90 days, 39% in 180 days. And in my opinion, we shouldn't be looking at time frames shorter than this at all. Like if you can't wait 180 days, half a year, then I'm not so sure that you are an investor. You might be a trader. But I pulled these numbers anyway. So Google, you'd be down 13%, 24%, 20%, 26% respectively relative to the time period. Oh, the S&P. Okay, let's say we put our money in the S&P. That's where we felt was good store value. We'd be down 8%. We'd be down 13% if we put it in 60 days ago, 8% if we put it down 90 days ago, 15% if we put it in 180 days ago. You can look at gold. You'd be down 2%, 5%, 3%, 3%. Silver, 7, 13, 10, and 1. These are the most common stores of value, and they are all, in my opinion, very good investments. You might have a different one. You can actually run this yourself. Really easy to find all this information, and it's really easy to do this calculation. We've talked about it before. So those are some of the strongest stores of value that have a long history of being so, like gold, right? The S&P, Google, Tesla, Bitcoin, and ETH. Two largest cryptos. One is considered a store of value by crypto people. The S&P, often the store of value in the stock market that people use. Now, if you invested in Guard 180 days ago, 9,200%. 90 days ago, 584%. Just 60 days ago, 114%. 30 days ago, you bought it right near the tip, right? You bought a nice little rip there. You're down 16%. That's normal. Look at all of these other stores of value. They've been red, monthly, quarterly, etc. Nobody in their right mind is going to say over time the S&P has been a bad investment, right? So this is perspective. This isn't saying that these all suck and Guard is the best. It's saying that if you're sitting in Guard, or you could run this for Bitcoin too. Bitcoin's gotten really beat up in the last 180 days. But you could run this for investments and say, where else would I have put my money? I bought Guard, 90 days ago. Where else would I have put it that would outperform the dollar? First of all, that's obviously on a longer time frame. As we go further and further out, we want to see an average of outperforming the dollar. Where else would I put it? Bitcoin? ETH? So it's not just about that it's up 584% against the dollar. That's great. But assets will win and lose against the dollar over time. Typically, like the S&P, it goes up and to the right. It does outperform the US dollar over time. But look at how greatly it has outperformed the other options. See what I mean? So this is just perspective. You can swap these out. Obviously, I'm using Guard because that is our core value. That is the thing that we are building around. But you can swap this out for whatever you believe and give yourself some perspective. Where else was I going to keep the money? I don't see a better option. And we might be able to go dig and find some random coin that nobody ever heard of that during some time period, but it's not reasonable to expect that we knew that we have all this information ahead of time, right? Going retroactive doesn't work. So even though this data is retroactive, notice how I picked things that we would have picked instead of Guard, knowing what we knew. So that's how you do it. You say, given what I knew at the time, what were my options? Not given what I know now. Given what I knew at the time, what were my options? Bitcoin, ETH, Tesla, Google, S&P, gold, silver, Guard. You can add whatever you want. You can do your own calculations. They're very, very simple to do. All of these prices, this historical price data is available on Yahoo Finance and everywhere else. Okay, so that's the perspective that people miss. And they wonder why they're not winning. It's because people are chasing ETH. You know, people have been like, we've watched people sell Guard by ETH, trying to catch ETH for 6 months. Well, that hasn't worked out super well for them. Even in this short time period where Guard is down 16%, all those people that were chasing ETH are down 39%. Right? So we're looking at asset relative to asset, not US dollar in a short amount of time, because we're trying to figure out where to allocate our US dollars. Okay? Hopefully that makes sense and that's useful. So we want to look at the rolling average and the fundamental value. We have to understand how this market works, and we have to understand resource allocation. That's where the only question, I'm going to say this one more time because this is missed. How do I get rich quick is not an okay question in our world. Nobody's going to help you with that in the Wolf Den. That is not what we're trying to do. That is a byproduct of making good decisions over time. A lot of people made a lot of money really quickly. And great. And a lot of them sold off and took their money and did whatever they did. Awesome. That's what we're here for. And we don't get mad at people for winning. That's not, I don't understand that aspect of the market. Maybe I'm missing something. I don't get mad at people for winning. I'm not going to get mad at you for winning. I hope you don't get mad at other people for winning. It doesn't make any sense. However, how do I get rich quick is not the right question. Right? You know why? I'll tell you why it's not the right question. Because high levels of dopamine achieved without effort will destroy you. How do I get everything I want without trying very hard is a question that is leading to destruction. We're not going to facilitate it. You are welcome to. I'm teaching you the rules of the system and how it works. And you go to the white paper. You could try to get rich quick using our system. That's fine. That's not what it's built for. So don't complain to us when it doesn't work. The question we're answering is, okay, how do I get on track to fund my solvable problem reliably? I got a problem. I got 5 years. I want to achieve this. I got 3 years. I got 10 years, whatever. Where do I allocate my resources right now to have the highest probability of getting what I want? That is the question. Okay? Just to be clear with where we come from and where we're operating from and what we're building, the question is, if you are purpose-driven, something matters to you, and you have an appropriate timeline, where do you put your time, effort, and money in order to have the highest probability of getting the life that you want in a timeline that's appropriate? Not tomorrow or as fast as possible, but a timeline that you would look back and say, yeah, life's pretty good. That's the question. Where do we allocate our resources? That is specifically what Guard and GuardBUSD was built for, was to answer that question for a whole bunch of people. It won't be the answer for everybody. Some people need $4 million by next week. GuardBUSD is not going to be the answer for you. Sorry. I don't know what is. I wouldn't touch anything that promised that, but that's your game, and maybe you win. Sometimes people play Russian roulette and walk away. So what does that mean for the wolf den? Okay. Break down a little bit of this for you guys, because we have a lot of stuff coming, and we have stuff I can't even talk about yet. We have, said it yesterday, Perfect Store Brewing. The only reason I ever know about the guard price is because people message me. I'm not worried about it in the short term at all. I understand if you are, you don't have the same information. A lot of it I can't share. I got NDAs and all that stuff, but it'll all come public, and it'll all be described and explained soon. But what it means for the wolf den is we're going to continue. Oh, I think I read my drawing. We're going to continue raising this floor that we were talking about, right? And it's going to diffuse, just like all things since the beginning of time have ever diffused. People always act like something's going to be different. It's not. The rate of adoption changes, for not just based on the technology, but also the way that it's the strategy of diffusing it. And here we got diffusion of innovation. So understand, we're talking to innovators. That's who we talk to behind the scenes. And when I'm sharing this stuff, you have to understand that an early majority, a late majority, they're not going to care about anything I just shared with you. If that's interesting to you, if that helps you make decisions, then you are innovator, early adopter. If you're going like, well, just tell me exactly what to do and guarantee my safety and blah, 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 then you're not an early adopter. And it's really important that you know that there will be a time for you to invest. We are not trying to get everybody to invest right now, because it's not good to have late majority invest in something they don't understand. Okay? Innovators and early adopters, they can connect dots. They can look at the white paper, and they can meet the person in charge, and they can go, ooh, I'm in on this. I saw the Tesla white paper. I met Elon Musk. I'm in. Okay? Not everybody makes decisions that way, but those are the people that have to buy in first, as per diffusion of innovation. Okay? So we get help desk tickets that are like, explain all of this stuff to me and yada, yada, yada. And it's like, look, one, here's all the information you asked for. But two, based on this question, it's not a good time for you to invest. I'm not trying to push you away. You are very clearly not in a place where the information available is enough for you to connect the dots and invest. That's normal. This is how technology diffuses. In the past, you were not aware of it because it didn't happen publicly. Okay? Does that make sense? Like, most of these companies, Microsoft was privately held for 11 years before it went public. It had 11 years of balance sheet, P&L, PR, digging on Bill Gates before any public person could decide whether they invested or not. Microsoft was somewhere around here when all of us knew, or when all of us had to decide whether or not we wanted to invest in it or not. It's over here now that it's on frickin' Robinhood. So does that make sense? So it's not that we don't want to give the information or the information doesn't exist. It's that we disseminate information along the curve because it is the safest for everybody. Getting your grandma to invest in like Bitcoin, it's not good. It's not good. You may, I got grandma in Bitcoin, but is she losing sleep over it? Does she know what to do about it? Does she know how to explain to other people? Is she ever going to access it? Like, is it actually a good thing that we got grandma into Bitcoin? Especially like grandma into Guard, right? Because now, like, does she know how to even get onto a decentralized exchange? This is not actually a safe position for her to be in. She doesn't know how to access it. And then, you could say, well, I'll do it for her. Like, cool. You're bridging that gap because you are here. Okay, but me talking to your grandma, trying to get her to buy, would be dangerous. So we have to understand that how ideas diffuse. And if you come in and you're like, give me this information that I need so I can buy, you have to understand that you're putting yourself in a really bad position. Because the information that is necessary for the innovators or early adopters is out there. It's readily available. It's published. I'm live every day. I answer questions. If that is not the safety credibility that you need, so innovators and early adopters, they buy from competence credibility. They want to work with Dr. House. Okay, early majority, late majority, and laggards, they want Dr. Phil. You can't be both. Not serving anybody if you're both. Okay, so we're talking to the people that they're saying, hey, look, I get it. we talked to, and I'll tell you some of those people we're talking to, talked to a world-class market maker. And we got on the call, and they were looking at everything, and they were just like, holy shit. Yeah, we're in. So one of the things that we did inside baseball is we're now going to work with a market maker. If you're like, oh no, market maker, that's the thing I don't understand. Well, then you're not an innovator or early adopter, right? So when somebody that knows crypto, there's another individual that knows the ins and outs of crypto better than anybody on the planet. And they looked at Guard specifically, and they looked at the Guard BUSD liquidity on NightSwap and said, holy shit. How'd you guys pull this off? Okay. So when we have extremely educated, wealthy, influential people that have been in crypto for a very long time, and they've done very big things in crypto, they look at it, they go, this is amazing. And on the flip side, we have people that are like reading the Rug Doctor site that are like, oh, 62% of the liquidity is in NightSwap. That's dangerous. Like, you have to understand, we have to cater to one of those segments of the population. Which one do you think it's going to be? Which one's best for the project? The credible people that have a lot of capital and a lot of influence, and also have a lot of influence over things that are going to be very, very important coming forward with regulations and stuff, right? So you just have to understand that, and I'm explaining this so that you know that nobody in this project is neglecting you. Here's part of guarding your perspective. You can go on to any of these projects, and we hear all the time, maybe you feel differently. We hear all the time, man, you've done so much more education. I bought a bunch of Polkadot, and I didn't know what was going on. Let's look at Polkadot. I just picked a random one. But I actually know somebody that I just helped them sell their Polkadot the other day. Let's look at some information here. Blah, blah, blah. Market cap. Here's what I'm looking for. Let's see if I can find it. Oh, this one doesn't say. Typically they'll show Polkadot's a couple years old. How old is Polkadot? Anybody know how old Polkadot is? You can leave it in the... ...2016. Okay? Polkadot, which nobody can really quite figure out when they first come in. Polkadot is 6 years old. 6 years old. Guardian is 10 months old. 10 months. It's not even a year old. It's a baby. So you have to understand coming in, like, give us all this information of this 6-year-old project. One, we actually provide more information than most 6-year-old projects. And two, we're a baby. You have to have this kind of awareness about where does this thing fit? Where do I fit? Like, this is very, very important to function in a world where you're voting with your money. You have to align where you fall on the diffusion of innovation scale with what you're investing in. You can make a lot of money being a late majority. You don't have to be early. You take more risk when you're early, okay? But typically, people that are the innovators, they have more capital to blow, right? There are people that can just put $1 million here, $1 million there, and if they lose it, no big deal. So you have to align this stuff. You have to realize Guard is almost 11 months old. It'll be 11 months old in 2 weeks. Does this make sense? So you're coming in like, well, look at Polkadot and look at Guardian. Like, what kind of comparison is that? It's like, look at this infant versus this 6-year-old. Like, that's a weird comparison. And we have to know ourselves. We have to know most people want to adopt. If it's on, they'll buy it when it's on Robinhood. Okay. By the time Guardian's on Robinhood, it's going to be like $150. So you want to wait till it's $150? Fine. That's not saying you can't make money. It's saying you cannot be early but have the disposition of a later adopter. You're creating dissonance for yourself. You're creating extra work for everybody, and you're creating FUD and problems, not because something's wrong with you and not because something's wrong with the project, but because they're not aligned. You are violating your own investing criteria by not understanding where you are and where the thing you're investing in is, okay? I hope that's helpful. I wanted to cover that really quick. So we just have to realize crypto in general is very, very early. 1.5% of the population has wallets. So we're still in the innovator phase, okay? Guard is, now if we zoom out and say this is crypto, Guard is early. It's 9 months old, 10 months old. It's almost 11 months old. So Guard's almost 11 months old. It is a baby. If you are here, you are so early that I don't think people are fully wrapping their minds around how early they are. Okay, and so if you don't understand how early you are not guarding your perspective. That is part of your perspective. Where am I in this, the grand scheme of things? Where am I relative to everything else? Okay, so guard your perspective. Don't violate your own disposition. You will do better. Don't be like me. Don't be like Martin and Chelsea. Don't be like Renee. I'm just reading names in the chat. You will do better aligning your strategy with your disposition than you will ever do trying to be something you're not. I am not in the camp that says late investors lose. Warren Buffett would be considered a later investor. He does not invest in anything until it's already adopted. He did just fine. He invested in insurance and chewing gum and Coca-Cola, and he wasn't early on them. Okay, so just to clarify, I'm not telling you to be different. I'm telling you to know yourself. You will do better if you know yourself and you align your strategy. If it's too early for you, don't try to force it. You're going to irritate the people in charge. You're going to irritate yourself. You're going to buy it, and then you're going to feel dissonance, and you're going to be stressed out the whole time because you are just participating in something that is not aligned with who you are and what you want, and you don't understand it, and that's okay. You don't have to understand it. I don't understand the physics behind bungee jumping. I don't know what the cord's made out of, but if I see somebody else do it first, I'll probably do it too because I feel safe. That's okay. It's okay to wait for safety credibility. You don't have to know everything about everything. If you invest from safety, just admit it, and then you can build criteria that makes sense for you. Make sense? If you want safety credibility, stop pretending like you want competence credibility. You're just hurting yourself. Just wait. Just wait till somebody like you does it, and you go, oh, okay, cool, you did it, and you drove a Tesla, and I rode in it, and I liked it, so now I'll buy a Tesla. I don't have to understand how electric cars work. The people that bought Teslas first either understood the technicals or they trusted Elon Musk. Different kind of buyer. At the end of the day, everybody can have Teslas in their own time that is appropriate for them. All right? So what does this all mean for the Wolf Den? Good question. Glad you asked. I teased a little bit that we brought on a market maker. Okay. So we've been talking to, I don't know how much I can share. I will share general details. We've been talking to the top legal practices in the world for crypto. We've gotten the same response every time. Holy shit, this is amazing. We've talked to some top market makers and top exchanges, same response, which is one of the reasons why I am working on my patience. I have a really hard time with people that point out like, yeah, but look at this over here. And like, no. People that understand crypto and have capital actually consider that a good thing. Like the amount of liquidity in NightSwap, people actually in Discord and otherwise, they are concerned that there is so much liquidity. Any real investor, here's a trick I learned. Any real investor, the first question they ask is how much liquidity is there? There needs to be as much as possible. Smaller investors, they invest, they don't understand how it's working, and they're scared, and they think more liquidity means somehow we can do more damage if something goes wrong, or I don't know. We talked to a market maker, agreed to terms with the market maker, and they said the same thing. There is actually stuff that Guard BUSD can do that no other token on the planet has ever been able to do, going from a decentralized exchange to an exchange, a decentralized exchange to a central exchange, because of the amount of liquidity. Okay, Guard BUSD for the win. And I'm not going to share names because I signed NDAs and I haven't read through every detail of them yet. So I can tell you there's one reason a token if they're smart. I mean, they could just do it for shits and giggles. There's one reason that a project or a token would bring on a market maker. Okay, does anybody know what that is? You can guess in the chat if you want before I tell you. The reason you would bring on a market maker or multiple market makers, especially one of this caliber, is a top flight central exchange or multiple top flight central exchanges. Okay, what a market maker does is ensure there is enough liquidity across all exchanges. It does arbitrage. It makes sure that the prices all stay the same across exchanges. So Guard's not like, $42 on NightSwap and $12 on PancakeSwap and $81 on frickin' Binance and $77 on KuCoin, because that creates a shit ton of volatility. So they're actively making the market, leveling out the price. A good market maker is going to do it to the upside, which means they're always going to help pull the price up over time. A lazy, poor, or poorly built market maker could potentially damp it down. Okay. What is a market maker? I'm explaining it right now. You can Google it if you want. This is a good example of maybe if you're not sure what a market maker was, then and you want to know, then you can go down that rabbit hole. But it really is like a fundamental of crypto. Like, where does liquidity come from? Right? On NightSwap, we have farms, so holders provide liquidity. But on KuCoin, where does liquidity come from? How is the price managed? Somebody buys $30 million of Guard on KuCoin, the price goes way up. How do we level out the prices on other exchanges, right? That's what market makers are going to do. They're going to arbitrage and stuff like that. And really good market makers create an incredible opportunity. So the other thing that happens with a market maker is the volume skyrockets. Okay, so somebody buys a bunch on KuCoin or something, and then there's arbitrage that happens. A market maker will level out the price across all exchanges, which pushes volume through all the exchanges. So it's actually this is we're the only project that is built and set up for this. It is a huge like quantum leap forward for Guard BUSD providers. So if you don't know, Matty Dubs did the math. The trading fees on Guard alone, on average, given the existing volume, the trading fees on Guard alone, not the farm or the auto compounding, just the trading fees, work out to be about 53% a year. And that's going to go up with a market maker. Right? So you can see that the whole thing is built to continue to raise the floor. Obviously, if trading fees go up, Guard BUSD providers continue to get the benefits of providing, the base case, chilling in the base case. Obviously, with a central exchange, I'm not going to name dates or times. I don't want anybody going in the chat going, when exchange, because here's the thing. There's a very well-known saying, buy the rumor, sell the news. What we don't do is we do not spread rumors for people to buy, so there is nobody to sell the news. This is one of the ways that we continue to increase the stability as much as possible. Of course, it'll get overbought, it'll get sold, it'll go overbought, it gets sold. It's going to happen. But we actively try to mitigate the volatility. And part of that is we've known exchange is coming for a while. We don't, and the reason I'm talking about it an hour and 20 minutes into the video is so only the people that are patient and paying attention are part of this, and hopefully you can understand. Blasting it everywhere. Exchange coming. What happens is a bunch of people buy just so they can dump on the exchange, and that does not help anybody. It doesn't help anybody. Will the liquidity go through, stay on night? Yeah. So if you're worried about the liquidity moving, then again, just don't understand how crypto works. Guard BUSD is so deep in liquidity that it will continue to be most likely the thing that drives the price. There's no reason we would move liquidity off Guard BUSD. In fact, it should grow pretty rapidly, right? So nothing changes. Nothing changes on. All it does, it amplifies the current base case. That's all it does. Okay? It amplifies the volume. It probably grows the liquidity because the trading fees are paid in LP. So if trading fees go up, if trading volume goes up, trading fees go up, LP goes up because the fees are paid in LP, right? So again, this is one of the things that we slow roll and we put really late in videos and we talk about very carefully because most prefer the certainty of misery to the misery of uncertainty. And here's the thing. I know you want to know how it works. I understand. Quit your job, come to the office, and we'll spend 10 hours a day every day for the next 6 months, and you'll start to understand it, right? I gladly do that for somebody, but that's what we don't understand. And people are like, well, can you explain this to me? Is we got to go back to diffusion of innovation and realize like it's going to be years before early adopters actually understand. I've spent 11 months deep diving on this for anywhere between 5 to 12 hours a day. Learning how this actually works is going to take years. So if that's what you need, then just wait. There will be a time where it's appropriate for you to adopt. Okay? And so it's people think like we're being short or frustrated or we're getting frustrated, but you can't come in and say, teach me 8 months of what would take maybe 10 to 12 hours a day of pushing buttons to really understand. But can you teach it to me in the next 2 minutes in this Telegram? Right? That's a disconnect. It's a great example, actually. It's a good disconnect of you're investing out of your realm. You're investing out of your realm. Now, you might need to reorient. You might say, you know what? I trust Nick and Dan and the Wolf Den, and that would make you an innovator. Okay, so a number of innovators just said, I trust Elon Musk. I don't need to understand it. Right? So it might just take a reframe. Nobody said, I trust Elon Musk, but I have to understand how he's going to build these batteries. Nobody knew how the batteries were built until the Gigafactory opened in Sparks, Nevada. Right? So you don't get to be early and also get to know everything. That's part of the game. The earlier you are, the more upside you have, the more risk you're taking. It's part of the game. So hopefully that makes sense. Okay. So market maker, that does mean you can infer if you use your reasoning skills. There's exchange listings coming. If you know me, I have no interest in an exchange for the sake of exchange. Doesn't do it for me. I don't care. In this case, it removes a very important limit. It brings on a market maker that greatly amplifies the base case. If the base case gets amplified, the guard price gets amplified. So whether you're holding guard individually or guard BUSD, it's coming. It does stabilize the price, and I expect, my speculation is that we will have for sure one top 5 exchange in the next couple weeks. I don't know. Our end is done. We're just waiting. Probably 2 top 5 exchanges by the end of the year. And market makers set up. And again, all of these market makers, these exchanges, these law firms, these banks, they look and they just say, this is fucking incredible. Even though I was kind of like, oh no, man, I wish they were looking at it when guard was $17, But no, they're looking at it when guard is $740, and they're going, this is fucking incredible. Because they know what they're talking about, and they have the perspective. They're looking at thousands of these projects. They're working with Coinbase, FTX, Binance. I don't know if anyone work with Binance. I know they're working with Coinbase and FTX. So when I get that feedback, I'm going to share what I can with you. But you also have to understand why, like the FUD, it just doesn't hit us very hard because we know it's coming, and we'll do our best to share it with you. All right. So let me zoom through this real quick so I can try to be done by 10:30. Here, the way this is built, okay, and what Guardian is in the eyes of institutional investors, because institutional investors don't quite understand crypto yet. So this is how they see Guard. Guard is like Wolf Den Pro. Like you got Coinbase for retail, you got Coinbase Pro for professionals. Guard is like Wolf Den Pro, where we are incubating and facilitating all of these projects, right? And you can see, obviously, and the Wolf Den is like retail. It's like a bunch of users it's all of you guys learning how to invest in base case and community and all that stuff. Okay, but there's actually a level outside of that, which is we're talking to institutions, organizations, Black Swan Group, Chris Voss, Genius Recovery, Certainty App, Certainty U. We're working on projects with obviously Joe Polish outside of that, Kumite, and then Spartan, Luna Den, Wolfies, Knight, Forge. So there's actually like a Wolf Den Pro, and that's what Guard represents. Is we are guarding perspective, guarding mindset, guarding financials, guarding the solvable problem. There are guardians of the guard in the Kumite game, and over here, right, we're doing a lot of good with the Wolf Zen, with Grey Wolf Mountain. We're partnering in the real world to do a lot of things, and what happens is all of the benefits that happen. Okay, so if Certainty U changes the world, if Certainty App changes the world, if Genius Recovery changes the world, if the Black Swan Group continues to change the world, what happens, especially through a joint project, what happens is all that gets reflected in the value of Guard. So if we go back to our drawing of our lower lows, these are all things that will contribute to that, right? So what Guard is Guard is a representation of the value. It's two things. One, it is a store of value within the Wolf Den ecosystem. Everything that's happened up to this point is Guard standing alone with a little bit of, some buyback from Wolfies. So separately, if the Wolf Den grows, Wolfies, everybody needs Wolfies to get in and climb, puts buys on Guard. If Night Swap continues to grow, which it will, and the price of Night is supported, then the yield on Guard BUSD goes up and the auto compounder buys get bigger. Forge directly buys back Guard, so if they continue to do well when they get out their utility, so on and so forth. Luna Den, you need Wolfies to get in. That's their primary currency. Buys on Wolfies, buys on Guard. Spartan, obviously Joey's doing an amazing job with Spartan. Directly buys back Knight, which directly benefits Guard. Kumite will be a direct benefit to Knight. They're going to drive a massive amount of volume through Knight, and we're going to do a lot of cool stuff to partner with them. And they're going to have Guardians of Guard, which may directly benefit Guard here, okay? But when I talk about Guard, I'm talking about it without all of this stuff. Guard BUSD as a standalone will do all the things that we have talked about, in my opinion. That's what it's built for. So the additional price support, the additional value means if the things we're doing in the real world and the things that other people are doing in the crypto space are valuable to people, it will slowly pull up the floor of Guard. Not the peak. Like if it gets overbought, somebody buys $20 million and then sells it, like it's not higher peaks. These are not, the value you put into the world does not create higher peaks. It doesn't. Speculation and greedy people and people have no idea what they're doing create higher peaks. The value that you put out into the world is represented by the floors, higher floors. That is where people go, nope, I'm not selling because of the value that I got or that I'm getting. So these projects will have built into their smart contracts Guard support, and these ones will have built into smart contracts or other contracts Guard support, right? I do not have the big levers here because the big levers, there's all kinds of legal stuff I have to navigate if I start. I don't know what the implications are, but there are, we are talking to banks, we're talking to legal firms, we're talking to market makers. We did sign an agreement with the market maker, which means there is an exchange coming. I'm not going to tell you which one, just because I want to make sure that we're not causing hype. We don't want anybody buying a promise. Just pay attention. I'm just telling you how to position yourself, telling you what to prepare for. I don't want anybody buying a promise. Just be prepared, and when things happen, they'll happen. Okay, so this is a version of anti-fragility. Is we're going to keep building stuff in the real world. I just showed you my event schedule. All of that directly raises the floor of Guard. This could all fail. It wouldn't matter because Guard is still going to do what it does standing alone. It's still going to print higher floors. Okay, so these are just additional things. Like Kumite, I hope it does really, really well, but it wouldn't have to do well, right? Kumite could do really well, they could crash. They could do really well, it could crash. All of those trading fees, even when Kumite does poorly, which I don't think it will ever do, but if Kumite did really, really, really poorly, or Spartan just got sold off to the ground, it still buys back Knight, which still buys back Guard, right? Which increases the buybacks on Guard through the auto compounder. So you see how it's built so that the floor raises when good things happen, the floor raises when bad things happen. That's anti-fragility. Okay? So higher floors, that's all. So you have to have an appropriate time preference to handle higher floors. If you want to buy guard and you need your money, it's the 26th. If you need your money on the 10th of next month to pay your bills, I wouldn't invest it. I don't think that's a good move, personally. You know? Just aligning all of that stuff together. So that's what that looks like. We're going to keep sure the next announcements will be big ones. I can tell you that the lending network that we built, there's two things happening, okay? These are all the notes for the upcoming Wolf Pup calls if you want to see them. The primary, secondary, tertiary assets, how to hedge a downside, how to get additional yield, how to build an optionality. That's all come into the Wolf Den training. Just left on my notes there. So we have Lending Network 1. This is ours, okay? It was built for us. Okay, that is live right now. It doesn't have guard on it yet because here's what we have to do. I'm going to zoom through this. Guard contract is getting migrated to a time lock. You don't have to do anything. Nothing changes for you. It just means that for your safety, for everybody's safety, guard is going to have a 3-day time lock, which means if I go in, I change the contract or I do anything, it won't take effect for 3 days, meaning everybody has time to react. It's a safety thing. It's a time lock. Nobody can wake up in the middle of the night and make a change that affects everybody in the morning. So we're putting a 3-day time lock on guard that is happening today. And once that is done, guard can be added as an asset so you can borrow against your guard. And we're just taking extra precautionary steps after the Terra debacle. That's how it goes. We slow down and we just make sure that we are handling everything we can handle on our end. Okay. So here's some benefits of the lending network. You can single stake your guard, okay, and get an APR. You're actually lending it. You're letting people borrow it, right? But it's single staking effectively. So you single stake your guard to get APR. You can single stake stable like BUSD to get APR. Okay. Now this is a gazillion times safer than what Anchor Protocol was. So if you want, if you're looking for somewhere to store your stables, and you can also stake large caps, Bitcoin, Ethereum, BNB for APR. Okay, and what you're really doing is when you're staking them, you're allowing other people to borrow them, and they're paying you back interest. Right, it's just a lending network. Okay, now lending network 2, we are going to have a second one. This was not built for us. It was acquired. Okay? Brilliant team of devs. They have a huge community. I'm not going to tell you who. You'll be able to figure it out once we announce it. We just acquired another lending network. With that lending network came their supply of tokens, which gives us optionality. So we got the lending network and the whole supply of tokens, right? Which is great. This is a goodwill play. Right, this is a goodwill play for various reasons in this market. Phenomenal devs. They just didn't have the team to run the lending network, and they've been good to us. They're great resources to have. So what we're gonna do is we're gonna take the lending network, and we're just gonna strategically. They came to us and said, "You're the only people we trust strategy wise." But the trade off is we get their supply, which means we can add new farms and kick out rewards for lending and all that stuff. And also another place to borrow guard. So you could split your aces, right, against, it's safer to split your aces if you want to split your aces for whatever reason. So this is lending network number 2. It was acquired last night, actually, and this will give us more options. This will likely, to be transparent, I don't know what's going to happen. We will probably train a team and hand over. Right, we don't actually need to run 2 lending networks. It doesn't really make a lot of sense. This is a goodwill play because in bearish conditions, put out goodwill. So this will put out a lot of goodwill to the team. Also, they have like 20,000 holders, right? So we're also gonna do what we can to help them out, and some number of them are gonna come hang out in the Wolf Den and buy guard and learn how we. So this question implies, again, just a misunderstanding. All right. So this is why let me try to be patient here. I just gave information. If you need more information, then the thing that I'm going to have to do is stop providing insight, right? Because you're asking a whole bunch of questions that have not been addressed yet, and they may not be addressed. We don't need to take action right now. It will all be explained. Nothing is going to move without the lending network's been live for like 3 days, right? So we have to decide as a community, are we early adopters or are we going to be later? Which means, can we handle new information without all of the clarity on everything, or do we have to wait until everything is built to explain it? Okay, that's the decision that we're gonna have to make as a community. And I can discern through the Wolf Den tiers. I might just share stuff with Wolf Den tiers, but if you need to have all of the information about how everything works before you can even be told, hey, this is coming around the corner, then it's creating a lot of work and effort for everybody. And that's on me. I'm not blaming you. That's on me for sharing something out of turn, right? Back to diffusion of innovation. I need to know who I'm talking to. I will take the blame for that. So I will break this down really quick one time. If it turns into a whole bunch of questions, then all I know is we'll just take the lending networks offline, and we will wait until all of the information is there, because .kev is on vacation. Like, people could take vacations, and on Monday we'll republish it all. We have to figure out what we can handle as a community, and then I will, as responsibly as possible, reveal it. Okay? You cannot be early and know everything. Remember that. They are diametrically opposed dispositions. So a citadel means we put a contract out and we preload it with BUSD. We are paying for all that BUSD. We're taking it out of our treasury and putting it in there. It's a preloaded contract. You single stake guard, you get BUSD, okay? A lending network is you single stake your guard, but you're actually lending it, and people borrow it and pay interest. There's two parties to that, okay? It's dynamic. They're different things. The good thing is, if you think critically about it, some people will use Lending Network 1, some people will use Lending Network 2, and some people will single stake in Citadel, which means the APR goes up for all of them because the guard is distributed more evenly. Does that make sense? So we just need to slow down. We need to wait till we can see everything. And if we don't have the information we need, we wait for it to be published. Or the responsible thing to do on our end, which is totally cool, is to stop giving sneak peeks around the corner. Either way is acceptable, right? We know our audience can handle it, or we stop giving sneak peeks because the responsible thing, there's no reason to create uncertainty if it's going to cause problems, okay? So Citadel is preloaded and pre-programmed. It is not dynamic, okay? The lending network means you are lending your asset and getting paid to lend it. Where does that come from? That comes from the interest that the person borrowing is paying on the thing. Okay, so you're just lending and borrowing to and from each other. There's a big fat reserve so that nobody's ever like runs off with assets. So 2 lending networks are coming. One is live. It was built for us, by us. We had a team of devs and security experts build it actually. But this was built specifically to support Guard and Knight. And this one was actually built before Guardian even existed. But they just don't have the capacity to run it right now. They've been very good to us. They've been very helpful. They've helped us with a lot of stuff. They have a lot of really good holders. So we're just going to take it and we're going to kind of clean it up and we're going to add Guard to it. And we may very well just train a team and hand it over. But right now, we're not going to let it die, right? So those are things that are coming. You'll be walked through step by step. If you are worried, oh, but what do I do with the lending network? Slow down. That is not base casing and chilling, right? You see how quickly we have conviction about what we're going to do, and then we violate it. One new piece of information creates little uncertainty, and all of a sudden we lose track of the guarding our mind. All right, so all those links will be there. I don't recommend anybody do anything until Monday, because Doc Kev is going to write all the write-ups and the Medium articles and all that stuff, and he is on vacation. He is having a good time with his family. That's what he should be doing. He's earned it. I think we can all agree. He's worked very, very hard churning out Medium articles like a maniac. And that's it. So here's what's going to happen. If you are in Guardian or VIP, the VIP group, I'm going to send you a Zoom link in about 1 minute. We're going to jump on Zoom. Jesse and Padram are going to be hanging out with you, and then we'll have Dr. Joe Spencer at noon. All right. Appreciate you guys. I tried to get it all in. All of this will be followed up with in more detail, individual videos and Medium articles and all that stuff. But we're going to go have some fun with the VIP stuff, and we're going to talk all kinds of nonsense. There is a 100-person cap on Zoom. We're not using my Zoom, so he's got a 100-person cap. So just jump in when you can, okay?